Okay, so I had my fun critiquing DeFi Llama in some of its analytics tools, but now maybe it's time I present my own way to try and refine what DeFi Llama is offering or presenting to us, its users, okay? If you want to know more about that, please keep watching because we've got some fascinating things that I'm going to be proposing or suggesting. But before I continue, please know that this is not financial advice. I'm not an expert. This is just my own angle. I might be totally off the campus here. I might be going in a totally different direction, but I think because I presented my case before, now I'm proposing a solution. And if anyone from DeFi Llama is watching, please consider some of the things I'm going to highlight in this video. Like I said, this is not financial advice. Do not take anything that I'm going to propose in here as anything coming from an expert, because I'm not. I'm just some layman who is interested and wants to learn all the time, and I explore and research what people who will help us with our research. And this content is also not targeting UK audiences for obvious reasons. The UK authorities do deem anything crypto related to be extremely risky, and they're trying to help you save your funds and your investment. That said, let's look at what I'm going to call a ready-to-use DeFi Llama dashboard that I think, if designed well, will track real value metrics, the kind that provide actual insight into a protocol's fundamentals, structure, and sustainability. And what we'll try and do in the coming months is we are going to try and start comparing some of these protocols, some of these layer 1 blockchains and networks and dApps using these metrics to see if our own understanding of where things are as far as DeFi Llama's analytics tool is concerned, if this is going to add value, we'll try and use these tools. So let's start with the objective of what we're trying to do here. We're trying to monitor and evaluate DeFi protocols and blockchains using metrics that reflect real economic activity, capital efficiency, and user adoption, not just superficial liquidity totals like TVL. Okay, so let's start with protocol fundamentals. So let's have the metrics, source on DeFi Llama, and some of our remarks. So you've got protocol name, you've got protocols or search bar, and the nodes. So let's start with fees. I think you'll have daily, 7-day averages, and the source on DeFi Llama is the fees tab, and this one tracks actual usage and revenue generation. Okay, that's on fees. The next one is revenue, which is daily and 7 days. Here you need to go to the revenue tab and focus on revenue distributed to token holders, if any. Okay, not just revenue, but revenue distributed to holders, token holders. That's what you are looking at. Okay, next let's look at treasury balance, and here you need to go to treasuries. This measures long-term sustainability. So if a project is not treasury balance left or very tiny compared to its size, there are some question marks because the team might about to dump on you, they make a run for it, and you are left holding worthless tokens because they will have given up. Next, you got emissions rates, and you go to emission, token inflation pressures, and yield sustainability. So if they are giving you 90% yield, 120%, 1000% and stuff, you need to know where that value is coming from. You are probably the exit liquidity, because there's no such thing where this is free money, is coming from thin air. It's coming from somewhere. And if some of these protocols, they ask you, if you stake your tokens today, are going to give you an APR of 1,200% or 50%, or where is that coming from? Where is the value coming from? It's coming from somewhere, and you are probably the value. You are the exit liquidity. Next, you got revenue to emissions ratio. This is manual now. It's fees divided by emission. So the higher the ratio, the more efficient the protocol is. Okay, so you want the fees to be more than the emissions so that the ratio is high, which means the protocol is more efficient or the network is more efficient. Now let's move on to user and adoption metrics. We're looking at protocol fundamentals. Yeah, now let's move on to user adoption metrics. So you got daily active wallet, and the tool here, you go to users or June dashboard. This is a proxy for real engagement versus TVL wash deposit. You actually need to go to daily active wallet. Okay, and this is just on active wallets, not active user. Okay, next is transactions per day. This is often listed per protocol, and the higher it is, the more organic the usage. Okay, transactions per day. The higher it is, the more organic the usage is. Okay, again, it could be watched, but rule of thumb, that's what you're looking at. Next, you're looking at airdrop farming traffic, and the tab, you go to the airdrops. You go to the section on airdrops on DeFi Llama, and here you are trying to identify simple risks, and you need to use this with caution, of course. Okay, so that was on user and adoption metrics. Next, let's go on to token economics. That's another metric you can get from DeFi Llama. Let's look at token price, for example, and the source will be tokens. That's where you get your token price, right? And it track with emissions and revenue. Okay, that's the token price. Next, you got fully diluted value versus revenue, and you got to do a manual calculation here because you may not find it anywhere else where it's readily available. So you want to do a manual calculation of the FDV from the likes of CoinGecko versus the revenue. Okay, find that ratio, and that metric is going to help you determine over and under valuation. Okay, that's what is going to help you. Next, let's look at buybacks and bans as a metric. Again, this is going to be a manual calculation from tokenomic documentation. This one indicates sustainable value return. I think with Hyperliquid so far they've been doing it kind of all right. Next metric will be real yield, and this is a revenue distributed versus total stake. Okay, key for long-term holders versus pure inflation-based yield. You need to look at that closely. It's not looking at pure inflation-based yield model. It's looking at long-term holders. Okay. Next, let's go to capital efficiency metrics, because a protocol or blockchain that is not applying its capital efficiently is going to lose out, right? So how do you measure that? You use TVL versus users, and the source here is a manual calculation. Again, you are looking at total value logged divided by daily active users. That should give you a ratio that you can use, and when it's low, it means more capital efficient protocol or network or blockchain. If it's high, it probably means the TVL is washed. They're doing some sort of cleansing. It's not real, it's not genuine. So you want that to be lower. Next, you got TVL to revenue. Again, another manual calculation. Here you can do TVL divided by daily revenue. This one will help you detect overcapitalized or underperforming protocol. Okay, the protocol is overcapitalized, or if it's underperforming, you want to use TVL to revenue as a metric. Next, you got growth trajectory. Here you are using TVL historical graph. Use the 30-day and the 90-day percentage change, not one-day swings. Please, one-day swings are not going to give you a good picture about the long term, because one day is temporary. Okay, so that's on capital efficiency. Next, let's move on to cross-chain and ecosystem analysis. Some of these things you guys probably have never considered them, but here it is. So you got the bridged asset law. Using bridges, that will be a source of information. This means capital flows between chains, and it shows trust and liquidity. So watching or tracking bridge usage or bridged assets flow gives you a capital flows between chains, which also shows trust and liquidity. Next, you got layer 2 dominance. Here is chains plus filter by layer 2s. Tracking, you are trying to track growing layer 2s versus base layer 1. So layer 2s, for example, on Ethereum versus ETH network itself, what is the dominance for layer 2s? That's what you're trying to do by looking at this cross-chain and ecosystem analysis. Next, you got DEX versus lending protocol. Here you filter by category. You are trying to compare traction across vertical. Okay, DEXs versus lending. Are the DEXs being used more, or the lending protocols are being used more? That's what you are trying to do here. Okay, and you also got some optional data sources to enhance this. You got June Analytics, which is custom dashboards for wallets and transaction level activity. You got Token Terminal for fully diluted value / revenue and protocol PE ratios. You got Messari for token release schedules and VC unlocks. You got CoinGecko and CoinMarketCap API to automate token price and supply data. And how do you use this? Open DeFi Llama, navigate to each section via the left-hand menu or direct links. Use Excel or Notion, track the values regularly, daily or weekly. Apply custom formulas like capital efficiency, which you get to by TVL divided by revenue. You got emissions efficiency, which you get by dividing revenue by emissions. You got user efficiency, which you get by dividing TVL with daily active wallets. And here are some tips before I round this off, guys. Always normalize metrics over time. You got the 7-day over 30-day averages to avoid reacting to market noise. You need to have a plan. Compare protocols in the same vertical. For example, DEXs versus DEXs, lending versus lending. Do not do DEXs versus lending and layer 1s versus a DEX or something. That shouldn't be the case, because you're comparing oranges and apples here. And you also need to watch for incentive cliffs. When rewards end, real usage will be revealed. I think we gave examples of some layer 2s as well. Anyway, guys, those are my thoughts on what I think we could do to improve some of the metrics we get from DeFi Llama. And I'm hoping DeFi Llama is also listening. And if some of these things have already been integrated, I'll be very glad to be pointed in the right direction. Until the next one, guys, this is FD for Sage5.tv. Always after your education and trying to educate myself and you guys. Until the next one, this is FD for Sage5.tv. Bye for now.